All right. So are you ready to get a little bit deeper into this whole world of debt management plans?
Oh, absolutely.
It's something that a lot of people, I think, are kind of maybe a little hesitant to even talk about.
Yeah, it can feel a bit taboo.
Yeah.
But, we've got this article that we're using as our jumping off point today called Understanding Debt Management Plans, How They Work and How They Can Help You. And
It sounds a little dry, I know.
that's still a bit, yeah.
But I think this is going to be pretty interesting because
Yeah.
whether or not you're dealing with debt right now or you just want to be financially savvy for the future,
Absolutely.
this is something that everyone, I think, can learn a little something from.
For sure.
So
yeah.
Debt management plans, or DMPs, as the cool kids call them.
Right.
What are they really all about?
Well, at their core, a DMP is all about getting you some help with your debt.
Okay.
But it's not just about throwing money at the problem.
Yeah.
It's about working with a professional, a credit counseling agency, to kind of create a plan that is tailored to your specific situation.
So it's not just like, I'm going to pay you $50 a month and you make all my debt go.
Yeah, no. It's much more strategic than that. It really is.
So how does it actually work?
So you reach out to a credit counseling agency.
Okay.
And they're going to kind of do a deep dive into your finances. And they're going to look at your income, your expenses.
Okay.
And obviously your debts.
So this is where I have to bare my soul to a stranger.
You kind of do, yeah.
Huh.
But it's important because they need that full picture.
Gotcha.
So that they can create a plan.
Right.
So based on that information, they're going to work with you to develop a personalized budget.
Okay.
And they're actually going to go to bat for you with your creditors.
Wait a minute. So they're not just
They don't just give you a budget and say good luck.
Right.
They're
actually negotiators.
They're negotiators.
All right. So I'm picturing them in a boardroom with my credit card companies, going to battle for me.
Kind of, yeah.
I like that.
It's a little bit less dramatic than that.
Yeah.
But they are going to try to negotiate lower interest rates.
Okay.
And possibly even lower monthly payments.
Now, how much can they really get those rates lowered, though? I mean, come on.
Well, it really depends.
Okay.
But I've seen cases where people have gone from crazy high interest rates, 20% or more,
Yeah.
down to single digits.
Really?
Which can save you a ton of money.
Okay.
In the long run.
So they're like financial superheroes?
Kind of, yeah.
Debt fighting ninjas.
Debt fighting ninjas.
All right. I like it.
Yeah.
So they're negotiating lower rates, potentially lower payments.
Right.
What else is part of this magical plan?
Well, it's not all magic.
Yep.
There's some work involved on your part, too.
Uh-oh.
Yeah.
Okay, what do I have to do?
So you're going to be making one monthly payment to the credit counseling agency.
Gotcha.
And then they distribute it to all of your creditors.
Yeah.
So you don't have to juggle multiple payments and due dates and all of that.
That is kind of nice.
Right. It simplifies everything.
Yeah.
And the key here is really sticking to the repayment plan.
So there's some discipline involved?
There's definitely some discipline involved.
So it's not a completely hands-off approach.
Right. It's a partnership.
I'm starting to get it.
Yeah.
Okay, so this is starting to paint a picture.
Right.
But I got to ask, are there any downsides to this whole DMP thing?
Well, like anything, there are potential drawbacks.
Okay.
We'll get into those a little bit later in our deep dive.
All right, you've got me hooked.
Good.
Let's keep going.
All right. So, welcome back to our DMP deep dive.
Yeah, I'm really starting to get into this.
Good.
I think a lot of people listening are probably thinking the same thing. So
yeah, it's a topic that affects so many of us.
And we kind of hinted at some potential downsides of DMPs before the break.
We did.
And I know a lot of people are probably thinking about the big one, which is credit scores.
Right. That's a big one.
So let's just get right into that.
Yeah, let's do it.
So how does a DMP actually affect your credit score?
So it's not as simple as just saying it's good or bad. It's a little more nuanced than that.
Nuance is good? Nuance is good?
Nuance is good, yeah.
So walk me through it.
So basically, when you enroll in a DMP, some of your accounts might get flagged as being managed by a credit counseling agency.
Okay.
And that can initially cause a little bit of a dip in your score.
A dip, but not like a free fall, right?
Right. It's usually not a huge drop.
Okay.
And here's the thing. That dip can actually be a good thing in the long run.
Really?
Yeah, because a DMP helps you establish a really solid track record of on-time payments.
Oh, okay.
And over time, as you're consistently making those payments, your score is likely to rebound and even improve beyond where it was before.
So it's kind of like a short-term sacrifice for a long-term gain.
Exactly. It's like an investment in your financial future.
Okay, so it's not like a punishment for getting into debt. It's more like a sign that you're taking control and getting back on track.
Right. It shows lenders that you're serious about managing your debt and that you're taking steps to improve your financial situation.
I like that, yeah.
Yeah.
Okay, so we've got that initial dip that might happen, but then over time it rebounds and hopefully it goes up, up, up.
Right.
But what about access to credit while you're in a DMP?
Yeah.
Can you still use credit cards or get loans?
That's a good question. And typically when you're in a DMP, you agree not to open any new lines of credit.
Ah.
And that's actually part of what makes it so effective.
Gotcha.
Because it helps you break the cycle of relying on credit and really focus on paying down what you already owe.
So it's kind of like a forced savings plan.
Kind of,
I mean, not that anybody wants to be forced into anything, but in this case, it might actually be a good thing.
Exactly. It's like a financial timeout.
Okay.
To help you regroup and get back on track.
No new toys until you clean up your room. I like that.
Yeah.
Okay, so we've covered credit scores, we've covered access to credit.
Mm-hmm.
Any other potential downsides or things people should be aware of with DMPs?
Well, one thing to consider is that there are usually fees associated with DMPs.
Oh, got it.
Credit counseling agencies are not charities.
Right.
They need to cover their costs.
Sure.
But the fees are usually quite reasonable, especially when you consider the potential savings from those lower interest rates that we talked about.
Yeah, and hopefully they're transparent about those fees up front.
Absolutely. A reputable agency will be totally upfront about all their fees.
Okay, that's good to know.
Yeah.
So fees, that's something to think about.
Yeah.
Now, let's talk about choosing a credit counseling agency.
Okay.
Because they're not all created equal, are they?
Definitely not.
So how do you find a good one? What should people be looking for?
The first thing I would say is look for accreditation.
Okay.
From reputable organizations like the National Foundation for Credit Counseling or the Financial Counseling Association of America. That's really important because it ensures that the agency meets certain standards of ethical conduct and that they have experienced qualified counselors.
Okay, so accreditation is like the gold standard.
Definitely.
And then what?
I would also recommend looking for an agency that offers a free initial consultation.
Wow.
This gives you a chance to talk to a counselor, explain your situation, and really get a feel for their approach without any obligation.
Okay, so it's like a financial first date.
Exactly.
See if you have a good vibe.
Yeah, see if you feel comfortable with them, see if you trust them.
Right, because you are sharing a lot of personal information with them.
Absolutely.
So what kind of questions should I be asking during that initial consultation?
We'll definitely ask about their fees, their negotiation process, and their success rate.
Yeah, that makes sense.
You know, how often are they able to help clients become debt-free?
Okay.
A good agency will be happy to answer all of those questions.
Transparency is key.
Absolutely.
So I found my agency. I've got a good feeling about them. I'm enrolled in a DMP.
What happens next? Do I just sit back, relax, and let the magic happen?
Well, it's not quite magic.
Okay.
It's a collaborative process.
Okay.
The agency is there to guide you and support you and advocate for you.
Right.
But you're still the one who's in the driver's seat.
Okay.
You need to stick to the repayment plan, communicate with the agency if anything changes in your financial situation.
So there's some personal responsibility involved.
There is.
I can't just be like, okay, you handle it, and then go spend all my money on shoes.
Right, exactly. It's a partnership.
Okay.
And ultimately, you're the one who benefits from becoming debt-free.
So it's a journey.
It is.
It's not just like a one-time fix.
Right.
Okay, I'm getting that. So we've learned a lot about DMPs, the good, the bad, the ugly.
We have.
Anything else we should explore before we wrap this whole thing up?
Okay, so we're back and ready to wrap up this DMP deep dive.
Yeah, we've covered a lot of ground.
Yeah, we have, and hopefully people are starting to feel a little bit more empowered.
That's the goal.
To make smart choices.
Absolutely.
When it comes to their finances.
For sure.
But I think it's important to acknowledge that even if a DMP isn't the right solution for everyone right now,
right,
there are still steps that people can take to kind of get a handle on their finances and, start building healthier habits.
Oh, absolutely. Financial health is a journey.
It is.
It's not a destination.
It's not like you just wake up one day and you're like, I'm a financial guru.
Right.
Like, it takes time.
It takes time and effort.
And effort.
And education.
So where do we even begin? I mean, are we talking like, are we all supposed to go back to school and get like a finance degree?
I mean, you could if you want.
Okay.
But there are so many resources available that are much more accessible.
Like what kind of things are you thinking of?
Well, for starters, there are tons of websites and blogs.
Okay, yeah.
Dedicated to personal finance.
Yeah.
And a lot of them are free.
Free's good.
Free's very good.
I like free.
They offer articles, tips, even budgeting tools that can really help you get a handle on your money.
Okay, so what are some, reputable websites or blogs that you would recommend?
Well, there's NerdWallet.
Yeah, okay, I've heard of that one.
The Balance, Investopedia.
Mm-hmm.
Just be sure to look for sites that are unbiased.
Right.
And offer evidence-based advice.
Okay, good advice.
Yeah.
Websites, blogs, what else?
Workshops and seminars.
Oh, yeah, in person.
In person, often offered in local communities.
Okay.
Sometimes for free, sometimes for a very low cost.
Okay.
And these are led by financial experts.
Right.
Who can provide really valuable insights and guidance.
So this is if you're a person who likes to learn in a group setting.
Yes, absolutely.
This is a good option.
Yeah, it's a great way to connect with others.
And learn from their experiences, maybe.
Exactly.
Okay, so we've got websites, we've got blogs, we've got workshops.
And don't forget about books.
Ah, books.
I was going to say,
I love a good personal finance book.
Me too.
It's amazing how many good ones are out there.
There really are.
And they can teach you so much.
Yeah, and there's something about, reading a physical book.
Yeah.
That just, helps the information sink in.
Yeah, it's like a different kind of learning.
Exactly.
Okay, so we've got lots of options.
Yeah.
Websites, blogs, seminars, books.
The key is to find what works best for you.
Right. What resonates with you.
Exactly.
Your learning style.
Absolutely.
Because everybody's a little different.
Right.
So find what speaks to you.
And don't be afraid to experiment.
Yeah.
Try different things.
Yeah.
See what clicks.
I think the biggest takeaway from all of this is that financial literacy is a journey.
Absolutely.
It's not something you just achieve overnight.
It's a process.
It's ongoing.
It's ongoing.
It's constantly evolving.
It's about continuous learning and growth.
So if you're feeling overwhelmed by debt or just want to improve your financial situation, just know that you are not alone.
Yes, there are so many resources available to help you.
And there are experts who want to guide you.
And you have the power to take control of your financial future.
So keep diving deep, keep learning, keep asking questions.
Yes.
And most importantly, never give up on your journey to financial well-being.
That's right. And remember,
you
got this.
You got this. Until next time.